Are you new to the world of cryptocurrency trading? Do you find yourself overwhelmed by all the information out there? We are going to take you through everything you need to know to get started with crypto trading, from the basics of blockchain technology to the strategies used by successful traders. Unit 1. Crypto Basics. Cryptocurrencies are a constantly evolving form of digital assets that represent value and can be traded on various exchanges with relatively low barriers to entry. However, it can be daunting for those new to the world of crypto to navigate the different types of blockchains, cryptocurrencies, and tokens available. At a basic level, cryptocurrencies are simply tokenized assets that represent value. Not all cryptocurrencies are created equal, though. Some are better than others, with more useful and efficient blockchains that support different types of tokens, while others may be considered low quality or poor blockchains. Understanding these differences is crucial for anyone looking to invest in cryptocurrencies. One significant advantage of trading cryptocurrencies over other assets, such as stocks, is the 24/7 trading availability and low trading fees. To start trading, you can sign up with an exchange and start trading immediately. However, it's essential to have a good grasp of the different types of blockchains and cryptocurrencies before investing in any particular asset. One of the most popular types of blockchains is a currency-focused blockchain, such as Bitcoin. These blockchains are primarily focused on being a ledger of transactions, keeping track of people's transacting activity. Stablecoins are another type of cryptocurrency, but are usually built on a different type of blockchain known as a smart contracts blockchain, like Ethereum. Ethereum differs from Bitcoin in that it allows people to enter into contracts on the blockchain, opening up many other potential uses. When investing in cryptocurrencies, it's essential to understand the different types of tokens and what they represent. Exchange tokens, protocol tokens, D5 tokens, stock tokens, and non-fungible tokens, or NFTs, all have their own unique value propositions. NFTs in particular are like art, with only one unique piece that cannot be swapped around. This is like valuing gold, where the price only comes from what people think it's worth. Unit 2. Tokenomics. Tokenomics is the combination of tokens and economics in the cryptocurrency world. The supply of a cryptocurrency plays a significant role in its value. If it has an unlimited supply, it could impact the investment in the long term. On the other hand, a limited supply can result in a higher price due to the high demand. The market cap is determined by adding up the total coins of a cryptocurrency, and the people holding it are important to know. Burning tokens is when companies take them out of circulation, and this can increase the price because the same demand exists. But there are now fewer coins in circulation. This is the basic economics of supply and demand. Unit 3. Crypto Trading Basics. Let's dive into the fundamentals of trading cryptocurrencies. There are a few important things to cover here. First, currency pairs, the bread and butter of trading cryptos. Second, it's important to grasp the concept of stable coins, as they are essential for beginners. And third, the difference between a base currency versus a quote currency. When you buy something in a shop using fiat money, the prices are already set, and you pay the shopkeeper in the same currency as the quoted price. However, when trading cryptocurrencies, you are exchanging one currency for another. Think of it as swapping your money at a foreign exchange booth while on vacation. Each crypto has a unique ticker, for example, BTC for Bitcoin and USDT for US dollar tether, which is a popular and useful cryptocurrency. Now let's talk about stable coins and the US dollar tether. A stable coin is a cryptocurrency that is pegged to a stable asset, usually a fiat currency like the US dollar, to minimize price volatility. The US dollar tether is one such stable coin. When reading a currency pair, you'll see the crypto against the stable coin, such as BTC USDT or ETH USDT. You can also trade crypto to crypto pairs like Bitcoin and Ethereum. Unit 4. Stablecoins. Stablecoins are the gateway to the world of cryptocurrencies and are used to trade against other cryptos. These coins are like the crypto version of fiat currency, but they're backed by real-world assets like gold or the US dollar, which is why they're called stablecoins. For example, US dollar Tether, US dollar coin, and Binance US dollar are all stablecoins pegged to the value of the US dollar. This means that 1 unit of any of these stablecoins will always be worth 1 US dollar. This is achieved through various mechanisms that keep the value stable. Stablecoins are incredibly useful for those who are looking for a way to invest in a solid, real-world asset without having to cash out of the crypto world entirely. So, if you're looking for a safe haven in the wild world of crypto, then stablecoins might just be your ticket. Unit 5. Base versus quote currency. When it comes to trading in the cryptocurrency space, it's important to understand currency pairs. The base currency is the currency you're buying, and the quote currency is the currency you're selling or using to buy the base currency. For example, if you want to trade Bitcoin, BTC is the base currency, and the quote currency could be US dollar Tether, USDT. The quote currency tells you how much of it you need to buy 1 unit of the base currency. The value of the quote currency may fluctuate, affecting the price of the base currency. Not every currency pair is supported, so sometimes you may need to use a third currency to trade 2 smaller currencies that don't have a direct exchange. This is known as a cross trade. That's where stable coins come in handy, as they help increase liquidity in the crypto space. Understanding currency pairs is essential for trading effectively and taking advantage of opportunities in the cryptocurrency market. Unit 6. Currency pair trading. Investing in cryptocurrencies involves analyzing the market and currency pair trading, which means betting that one cryptocurrency will outperform another. Diversifying your investments across several different coins and using stablecoins to minimize price fluctuations can reduce your risk and potentially increase your returns. Let's say you have $1,000 to invest and you decide to split it equally between Bitcoin and Ethereum, investing $500 in each. Both cryptocurrencies have been performing well lately, so you are feeling optimistic about your investment. However, you soon realize that Bitcoin has gone up by 20%, while Ethereum has only gone up by 10%. This means that your investment in Bitcoin is now worth $600, while your investment in Ethereum is worth $550. If you had invested all of your money in Bitcoin instead of splitting it between the two, you would have made a profit of $1,200. This is because Bitcoin outperformed Ethereum over the period of your investment. Careful research and analysis are crucial before making investment decisions, as selling one cryptocurrency to buy another is essentially betting against the one you are selling. Currency pair trading is a key strategy for investing in cryptocurrencies. By carefully analyzing the market and betting on one cryptocurrency to outperform another, you can potentially increase your returns. However, it's important to diversify your investments and use stable coins to protect your investments from market volatility. Unit 7. Crypto trading platforms. If you're interested in crypto trading, it's important to know the differences between the platforms and their pros and cons. We'll explore some of the best trading apps and platforms out there. First up is eToro, which not only offers crypto trading but also stocks, CFDs, commodities, and copy trading, where you can essentially invest in someone else by copying their trades. On eToro, you won't be charged any trading fees, but they take some money out of the spread, which is the difference between the buying and selling prices. You can also do staking on eToro. To start trading with them, you will need to go through KYC Know Your Customer. This is an identification verification process that most financial institutions require. So you will have to provide ID documents to be allowed to trade with them. Kraken, on the other hand, is a dedicated crypto exchange with very low fees and great coin support. Crypto.com is more smartphone focused and lets you use your crypto to buy and sell things, offering credit cards with competitive rates and cashback. Coinbase is great for first-timers who want to buy Bitcoin and Ethereum with fiat currency, but has very poor support for staking and coin support overall. KuCoin is an alt exchange with extremely low fees, but not beginner-friendly, while Binance is the biggest of them all, offering a vast number of products, the lowest fees, and amazing staking and coin support. So, if you're interested in crypto trading, research these platforms and determine which one works best for you. Remember, investing in cryptocurrencies can be complex and risky, but with plenty of research, the right and strategy, it can also be incredibly rewarding. Keep learning, keep exploring, and most importantly, keep investing. If you're interested in more content like this, then feel free to subscribe and check out our other videos on the screen. Thanks for watching.